The following conversation is an edit of a recorded Zoom call between Brad Samson, Investor Relations of ZEPP Health, and myself. As always, our content is never sponsored by the companies that we cover on this channel. We do not receive any benefits from those companies. Instead, these conversations are part of our own due diligence as an investor in the company. This is not financial advice, nor does it contain a recommendation to buy, hold, or sell any of the equities discussed. We may make forward-looking statements and state our own opinions, which may be biased and/or incorrect at some point in time. As always, do your own research before investing. Investing in stocks is risky, and you may lose all of your investment. All right, Brad, I'm glad to have you back on the channel. So this time, we're not gonna cover only what ZEPP Health has done in the recent months, but also speak a little bit about this macro environment, about Chinese ADRs. So should have lots of interesting insights, I would say, and should be valuable to the viewers. And my first question would be around what has happened also from other companies. We see that Facebook is going into wearables. Apple, there are rumors around that Apple may actually introduce new Apple Watches that may actually be cheaper or more affordable as well. So the critical question here would be kind of, how can ZEPP Health as a new brand survive in this ecosystem and within this competition? What makes you confident that the product, but also the brand, can actually compete in this environment?
It's great to be back with you, Marcel, and we appreciate the opportunity to discuss a few things. And I think the questions that you ask are definitely worth having a conversation about. The competitive environment is always an interesting question. Look, I think what's interesting to me is I've only been at the company about a year and a half, but we've really moved into more of a leadership position in the industry in that time. And this has been developing for a while, obviously, but it's really come to the forefront the last year or so. The volume we're doing, I think we shipped something like 46 million devices last year. It makes us one of the key players globally. And so we've achieved a scale that I think is important. And whatever competitors do come and go, big or small, I'm very confident in the competitive advantages that we have. So when you look at, for example, this week's announcement, which I think is probably one of the biggest announcements we're going to have in an entire year, the developers conference was talking about progress we've made on our proprietary chip, for example, with faster speed, more efficiency, those kinds of things. That's our proprietary technology is one of our critical advantages in this space. Most of the players who come into this space, especially smaller ones, are buying off-the-shelf parts that they get from somebody else and assembling a watch and things like that. Mm-hmm. Having proprietary technology, our own chip, our own sensor, our own unique algorithms, those kinds of things, is tremendously powerful in terms of being able to bring high quality products to market more quickly and at good value price points. And so I think our position of having leading edge technology at very compelling price points is always going to be a good proposition, especially on a global stage. Here in the US, we tend to get a very myopic view of Apple. I've been doing this a while. As you know, I was at Fitbit before here. And it's a common misperception in the United States for people to say, oh, well, just Apple wins everything just by default. And they forget that Apple's operating system for their computers and their phones is not universal. I mean, they've only got, they've got much less than 50% market share on a global basis. Mm-hmm. And so if you want to have an Apple Watch, but you don't have an Apple phone, you're locked out of that ecosystem. And so companies who are more agnostic about what operating system you have on your phone, like us, like Garmin, like a number of other people, that's a significant advantage. So I'm pretty comfortable, and I'm sure Wang would be very comfortable with what we're doing to maintain our proprietary technology, which I think gives us a very strong position and ability to compete with great features at good price points. I mean, look at what we announced this week. We're going to have a new open operating system that I think is going to be more efficient than what other people have. We announced blood pressure, optical blood pressure on the watch is going to be available later this year. We'll have that in time for Christmas. I mean, that's That's big stuff. So
Mm.
I'm pretty comfortable. We can delve into the competitive thing much more, but again, I still come back to those proprietary technologies that we have, having our own chip, our own sensor array. These are significant advantages. So let's
I would
stop there
say,
on that.
yeah. On the other hand, it's a pretty big challenge, right, for like a still perceived Chinese brand to try and go global. And it hasn't been really long yet since the ZEPP branded products actually went into Western markets as well. So can you share a little bit like how it's going? I mean, it's still early stages for those self-branded products, I'd say, but do you have anything to share around how well the consumers are adopting these products?
Yeah, I think there's a couple points I'd make. I mean, at the end of the year, and I'll just kind of stick with end of the year just to talk annual numbers. We had activations of devices of 100,000 or more in 27 countries compared to 9 at the end of the prior year. And to me, that's kind of a critical statistic to show that we are making good progress. Some of that's Xiaomi, but a lot of that is our Amazfit brands. And when you look at the Amazfit and the ZEPP brand reviews, we do pretty well. And to me, that's an important measure. It's if you're giving people a good user experience, if they're getting what they expected out of the device, if the quality is there, both in the software, how it interfaces. And I think the company has grown tremendously, even in just a few years, in terms of its ability to satisfy consumer desires. And so, again, if you go, for example, just to Amazon or something like that, or Best Buy, and look at the reviews, we're doing pretty well. I mean, you can't make everybody 100% happy. That's just life. But
Mm.
between the fact that we're selling more and more units, Q1 we had a tremendous progress of the number of Amazfit and ZEPP branded units that we sold. The brand is catching on. The brand is meaningful with people, and I think that's going to continue. We're very strong in Europe, obviously. We actually are quite strong in South America. We're growing in the United States, and so it's becoming a global brand.
Mm-hmm. Yeah, I would say like from the reviews I see, and well, I personally have also 2 models to try out, and yeah, I would say the weakness is possibly on the software side, right? So that was interesting to see also that you are kind of trying, yeah, new things there with your own ZEPP OS. And I'm not sure if you can go into this yeah, on a deep technical level, but my question is this open for other manufacturers also to adopt, or will this only be kind of installed on ZEPP devices?
I think my read now, again, I'm far away. I wasn't actually at the China event, and the China event was conducted all in Mandarin, so
Mm-hmm.
I wouldn't have understood even if I was there. But my understanding of the OS is that it is not only for our watches, but we would like it to become part of the Internet of Other Things as well. And because ultimately Wang's vision is to have a much broader ecosystem where your watch is tied into other things that could be devices in the home or even medical devices that, let's say you had a home monitoring device, for example, that you had some condition that required that would all be tied together. Your healthcare provider could be tied in. And again, what's interesting to me, one of the things that I am really proud of with the new OS is that it's designed to be very, very light. You probably saw in the notes that our OS is 55 megabits. I'm sorry, megabytes, and is 28 times smaller than Apple's OS. And if you saw the wording of how it was described as kind of a light client with cloud, right? And so this is something that I'm really excited about because it's a different view of how to do OS. One of the challenges when you open up an operating system to the world for outside developers, if you put yourself in the shoes of whether it's a watch or a phone, any kind of developer for a program, the incentive structure is to make something that looks really cool. It's got a lot of functionality. It's got a lot of whiz bang features, and a lot of screens, a lot of color, a lot of animation, those kinds of things. The problem with that is that if you're the manufacturer of the hardware, those things are hogs of memory and battery, right? Those things are battery and processing power killers. And that's one of the primary reasons why Apple Watches need to get charged so much, is you've got all these apps running and it's just sucking down the battery life. And so the idea of ROS is to have something that's much lighter that then preserves the battery life. And again, to the notion that for a lot of us, we believe that, and I know Wang believes this, after 10 years in this industry, I absolutely believe it, that battery life is the ultimate killer app in this space. I mean, if you've got to charge your watch twice a day, when you get to that point when your phone starts getting old and you've got to charge it more than once a day, you're ready to trade it in, right? You're like, this is out of here. I'm done with this. And so it's the same kind of thing with watches. And so the progress we announced with the new Huangshan 2S chip, with higher speed, much higher efficiency, much lower power consumption, combined with this lighter OS approach, we're going to continue to be a real leader in having excellent battery life that you only need to charge every couple of days.
Yeah, I would say that this is already like kind of the strength of the ZEPP watches. I personally, that's also why I bought like the Amazfit watch in the first place, actually, and that's something I really like about it. But on the other hand, I also noticed, like, for instance, the newer Fitbit watches, they also get like 1 week of a charge, right? The Apple watches don't have it, but I'm sure they may be able to catch up in some ways. But so I'm wondering, like, on the added functionalities, like right now, like blood pressure measuring, will this come to specific devices? And what can we expect of this in terms of how leading is this in the industry, and how much does it diversify ZEPP from the other competitors?
I think in the short run for this year, it'll probably be a pretty significant competitive advantage. I'm excited to see what happens with opening the OS and seeing what kinds of applications people create. But I think specifically to the blood pressure question, I think that's going to be a big differentiator later this year for us. I expect other people will have these kinds of features. Look, we live in an industry that is in a relentless arms race, right? Everybody's trying to outdo each other and have different functionality and features. And we're trying to create devices that are useful for many, many people. We have a very broad view. Our price range of the devices we have is one of the broadest among the bigger companies in the industry, right? If you think about Apple, Garmin, Samsung, people like that, we've got probably one of the, I might argue, we have the broadest range of price points of devices. What's interesting as well, though, is that we put the same chipset and same sensor array and algorithms in every device, whether it's the least expensive or the most expensive. So whether you're buying a $35 device or a $300 device, you're getting the best technology we have. Now, the packaging and what the materials are made out of and how the device appears, that's part of the price differential. But other people have different, I'll call it sort of missions, if you will. Garmin, for example, is all about being for elite runners, elite cyclists, and those kinds of things. And their product line is slanted that way. Good for them. They do some very high-end aviation things, right? It's a different approach. We're taking a more global view, I think. Apple seems to be moving towards trying to become really a medical device. I'm not sure that's what we aspire to be.
Right. Let's talk about the stock. So, well, it's been kind of a roller coaster in the last couple of months, I guess. So let's talk about maybe the macro environment in this regard as well. Of course, as a Chinese company, there is always this issue around US and China politics as well. But of course, we also had the fear around delisting of US-listed Chinese stocks. How do you think that has affected the stock of your company? And also, like, what measures are you dealing with in order to assure investors that there is a future of ZEPP listed at the New York Stock Exchange?
I'll answer that the best I can, Marcel. That's a, when you get into politics with countries, this is really a scary area. Look, first of all, I think it's affected the stock more than it really should. I'll start there. The reason I say that is that when some of these things have been announced, the market always overreacts. This is the nature of the stock market. They assume the worst, stocks get punished, and that's the way it goes. I think we've been punished. The stock price has been punished more than it should have been for some of these things that have happened. It sort of assumes the worst case is what will happen. I don't tend to believe that. For example, when you look at the delisting issue with being subject to the PCAOB, which was part of the Holding Foreign Public Companies Accountable Act, if they really let it get to that point, I think that's a disaster for both countries, honestly. Yeah. And we are in a situation where you have there's a line from a movie where they say the two biggest kids on the block, eventually they're going to fight, right? It's kind of what we're up against right now, I think, and some of the Chinese companies are sort of caught in the middle of this a little bit. I think it would be a really bad mistake to let it get to the point that you push some of these Chinese companies off of the US exchanges. And I'm not even talking about us. Think about a really powerhouse company like Baidu or NIO that you follow, right? These are very popular stocks that many, many people want to invest in. You chase that off the US exchanges, who loses? The US exchanges. That's a really bad thing for the US. We lose some of our standing as some of the biggest, best exchanges in the world if we do that. That would be a horrible mistake by the US. On the other hand, for China to push it this hard, there are problems on the other side as well. So there's a lot of political, a lot of political posturing going on here, and two countries pushing back and forth with each other. I think ultimately this will get ironed out. And frankly, at the end of the day, if you're a good public company, I'm not sure it's that big a deal to actually deal with some of these audit things that they're asking. But it's a political thing, right? I mean, I don't think structurally it's that hard to comply with these audit ideas they have. It's just I just don't see the Chinese government allowing that. And when you actually read the Holding Foreign Public Companies Accountable Act, it's not designed. Really, when you read the actual language, it's really not designed to be about improving accounting and safety for investors. It's a thumb in the eye to China, because when you get to about page 5 of it, it just starts going after China directly. It doesn't name any other country. It just says China. And to me, that's the worst part of the political thing. The latest thing that's going on here with China, talking about data security and things like that. I was really surprised that our stock reacted much at all to that, because if you step back from it for a second and think about it, as a healthcare company, we're probably already on the good side of what the Chinese government is saying they want. Okay. It's interesting. So when you actually read the language of the regulation that they're suggesting, while it's still thin on details at this point, it actually starts to read an awful lot like HIPAA regulations and some of what we have in this country about protecting consumers' data, protecting people's privacy, protecting data in general from unreasonable use, if you will. And so as a healthcare company, ZEPP Health is already subscribing to HIPAA in the US, GDPR in Europe, and a variety of other data security standards. And so if we're already compliant with those things in terms of data security and our own policies, if you actually read your user agreement that we have with you as a user when you buy one of our devices, is we will not divulge your data to anybody else without your permission, unless it's for certain uses where your data is de-identified. So for example, we might take some section of ZEPP Health data and make it available to scientific researchers who are studying sleep, for example, but that would all be de-identified. that's part of your user agreement that you agree to that. But again, there's no way to tie that to you. So your personal health information, your personally identifiable information, two concepts under HIPAA that are critical, that's all protected. So I think we feel relatively comfortable. I'm not surprised that the Chinese government went after a rideshare company. I don't know what those guys do with that data, right? They get your credit card, they know where you've been. I don't know what they're doing with that data, and there's no standards in that part of the industry for what to do with your data, right? So actually, I think we, as a company, actually applaud what the Chinese government is doing to force some better data protection. We could use some more of that here in the US with some companies still. Healthcare companies like us have been really put into some very stringent rules, but a lot of other companies who are collecting data off your phones. I saw an article not too long ago that talked about a number of apps that collect a lot of data that is undisclosed to users.
I fully agree on many of these points. It's actually good to hear it from somebody working on investor relations for Chinese companies, because I mean, I just formed these personal views as well on both the issues about the delisting, but also on the data side. But I think for the viewers, this will also be interesting to hear that this is actually like in the intent also of the companies as well. And now the question is, right, will investors think the same about this, and especially institutions? But as you just mentioned, you have many of these things in place. For instance, also I read that you are using AWS, so Amazon hosting for the data when going global. That should be another thing. But of course, you as a health company, this data issue will come at some point, and at least at this point, when you're finally making use of the data on more than just the personal algorithms that are happening within the watch, I would say, because ultimately there should be also this goal. But yeah, so that's really interesting to see. And on the other hand, also what you just mentioned, I think there was just an executive order by the White House, which is actually going in a very similar direction, actually with the intent of protecting consumer rights and also trying to limit tech in what they can do. So that should be common sense in the end of the day. But obviously investors react quite heavily to it right now, not only for ZEPP Health, but also other Chinese companies, of course. And yeah, maybe coming back to the institutional investors, because that's also your daily business, possibly dealing with some of them. I noticed, for instance, that some of the institutional investors have reduced their holdings. And so I'm wondering, like, what do you see, like, are the points that need to be tackled in order to invest in a company like ZEPP Health from your perspective? And on the other hand, is there maybe also an opportunity with that? Because I also noticed that possibly there was a really large institutional ownership in ZEPP Health previously, which, well, had the result, and I'm not quite sure about that. What is your take? But it has really a low volume, right? So that speaks of low investor interest, but also maybe that these investors had just holding the stock, but there wasn't a lot of liquidity in it, right? And I think that should be also an issue to tackle with ZEPP Health, to be honest.
Right. Well, liquidity is always, if you run investor relations, and again, as you know, Marcel, I've run IR. This is my sixth public company running IR, and driving liquidity is always kind of job one. I mean, everybody says, well, drive the stock price. It's like, well, but before you can drive the stock price, you've got to have liquidity. And so it's kind of a two hands kind of thing. Both things have to happen at the same time. And part of what you need to remember is, for some of our institutions that you're seeing move some of the stock, they're kind of adding and subtracting from their positions. A number of them have essentially passive portfolios where they're basically balancing how many shares they have of our stock for their whole market kind of approach. And so people come and go based on that, because they're just holding an index fund, if you will, right? And look, institutions buy and sell all the time. I stopped trying to second guess how institutions or what their motivations are, because they're always different. I can't tell you the number of times I've gone to a meeting with a new prospective investor and we walk out kind of with our tail between our legs, and it's like, oh God, they hated us. It's like these guys, that was a wasted meeting. And 2 weeks later, they've got a huge position in the stock, and you're like, okay. And you walk out of other meetings where it's a total love fest, and you're like, all right, these guys are going to buy a ton of stock, and then they never do. You just never know. So the best thing you can do is just present your case for the company, and explain it and be available to answer questions. That's my job. And at the same time, we've got to put the numbers up on the board, right? We're trying to, and this is what's got me excited about coming kind of back full circle to the announcement. As long as we keep putting up good leadership examples like the OS, like blood pressure, that people can have some faith that the products are compelling and people will find them compelling, that suggests we're going to have good growth. And at the same time, as long as I'm out there promoting the story, telling the story, getting it in front of people, institutional investors are running screens every day to look at what's undervalued in the market, right? And they do this on a continual basis. And so they're seeing us out there. And then if they're looking into the news and seeing what's out there about us, they start looking at it and say, all right, now wait a minute here. Here's this undervalued stock. I'm looking at what they're saying. They're announcing some interesting stuff. Now we're in the look at pile, which is my objective, get us in the look at pile, right? And as part of that, as you know, we've been very active on social media. I created, for example, a LinkedIn page just for ZEPP Health IR. And I post things there like the recent announcement. We put things on Twitter. We're on Robinhood. We're on StockTwits. Again, trying to answer people's questions, get the name out. What's interesting to me is a lot of the people who are doing the screening for new companies at institutional investors, at big institutional investors, are younger people like you, right? And so they're looking at things like StockTwits, Robinhood, all the rest of these social kind of investing channels for ideas or for things that, how should I look at this company? What are people identifying as the risks? Those kinds of things. And so we've actually been much more active in that than most companies. Most companies don't have the kind of social media presence that we have from an IR standpoint. So, again, I can't second guess what the market's doing, but the things I can control are, let's put up good numbers as a company. Let's be very vocal about what it is we're doing, our strategy, and what we think differentiates us, and then people will have to make their own decisions. That's the best thing I can do.
Yeah, I would say like it's possibly also what me personally got me started investing in ZEPP Health. If I read, for instance, the letter by the CEO and like the strategy and so on, it really makes sense in my mind. And I think, I can see where the company wants to go, and that this vision is also like really a tech company and not like just a manufacturer of wearables in the end. And so I guess that's what we younger or retail investors are currently seeing in there. And of course, it's still a market. So in the end, we need to see what will be the truth, as you mentioned. But maybe looking a little bit in the future, like what can we expect? I guess this year it's in Q4, the new products coming out with the blood pressure sensors, for instance. And then also, another really interesting announcement was about the MRI technology, I would say, which is still maybe a little bit more in the future, in the more distant future.
A lot more in the future,
Yeah, but I found it interesting to be that you've announced it during this event finally, because it gives us also a better a little bit of a grasp, at least, of where's the future heading. So if you could elaborate a little bit more on what the future brings, that would be, I think, very insightful and valuable.
Right. Well, and so first, let me highlight part of the rationale for even having this developer conference is that there's a shortage of good engineers in China. And so the company has to compete very aggressively to get good engineers. So a large part of, or I should say the genesis of this event, of the annual developer conference, is to get engineers excited about what the company's doing and interested in talking to us and considering working with us. And so that's fundamentally where this started. But at the same time, so that turns into an opportunity to showcase our technology, where we're going, how Wang thinks about things, where we're trying to drive things from an engineering standpoint. And so being able to talk about OS and some of these things that are coming in the future. And again, the genesis of this new move onto the industrial side of healthcare, with things like MRI and other imaging technologies, really comes from the fact that as we really last year or the year before, we started to recognize that some of these earlier or younger medical imaging companies are trying to miniaturize their devices. Well, what is it that we do? Our engineering expertise is in miniaturizing things, creating chips, artificial intelligence, sensors. Gee, could those go into a miniaturized MRI or ultrasound machine or X-ray machine? Yeah, they could. And so these young companies have some interesting technology, but they don't have that many engineers. It's kind of an idea. It's still a fairly young concept in a lot of cases, and they have some great technology, and there may be ways to improve it and make some of these things even more competitive with some of what we can add to the mix. So that's why we've created some of these partnerships. We've invested in a number of these companies like Promaxo and Hyperfine. You've seen that. And so we put some money at risk with these people. And what we announced on Tuesday was that we are starting some additional engineering initiatives in China to look at what do we need specifically for the China market. If we're going to help some of these companies come into China, how is China different than the US, for example? What do they need in the healthcare system? And it's different than the US. The US is structured one way with big mega hospitals, regional hospitals, community hospitals, ambulatory surgery centers, doctors' offices. China is probably completely different. So what does that need to be? And then to also start exploring more with our sensor technology, our chip, these kinds of things. What can we start doing to help add value to those medical imaging things? And so, the company's mission is much broader. Everybody knows us as a consumer company, right? But as stated, the company's mission is connect health with technology. Well, that doesn't mean just consumer. That can mean industrial as well. And ultimately, as I said earlier, the extension of this vision is to build an ecosystem that other devices can tap into, whether they're monitoring devices in the home or in a medical facility, connecting to your doctor so that you have some symptoms that crop up on your device. And the next thing you know, you haven't even paid attention to it, but the doctor's calling you and saying, hey, I'm getting some funny readings here. Can we talk, and can you come in tomorrow, or, whatever, that kind of thing. And so the idea of developing all this into an ecosystem is a really compelling idea. In the US, at least, there's still some big questions about who's going to pay for that. And that's probably one of the biggest hurdles to getting these things to happen in the marketplace, right? And because right now, and part of what was interesting about COVID is that in the US, for example, telemedicine exploded because suddenly people couldn't go to the doctor's office, and it gave telemedicine, the ability to talk like you and I are with your doctor, a big boost because they started reimbursing for that. And so this is all going to be part of how this evolves over time. So I envision the company, and I know Wang envisions the company, as much more of a broad-based company that goes across not just consumer, but ties consumer into industrial, and that we have, much like big conglomerates like Hyundai in Korea, right? They cover a gambit of different things. And I think ultimately that's Wang's vision, to be able to attack health on many different fronts, both consumer, industrial, in the doctor's office, out of the doctor's office, and have it all ultimately tie together.
Awesome, Brad. I think that's a really nice closing as well. And I don't want to take more of your time for now. Certainly going to watch like the next earnings calls and yeah, look more on the numbers and the financials that you've just mentioned. Is there anything else that you like to put out there? Maybe some surprise products that you can talk about now? Anything that we didn't talk about in this call? Maybe,
No,
I don't know, glucose measuring, anything exciting?
look, I just want to emphasize, I think people should really take a lot of good things from Tuesday's announcement. Announcing an operating system and being one of the first people to actually have blood pressure on the watch, I think these are examples of a company that's moving more and more into an industry leadership position. Obviously, we've already talked about the progress of the brands. I feel like there's a lot of good signs for the company. And if you're really in this for the long term, and again, look, I know people have different trading horizons. Some people are worried about what's the stock doing this week, and I'm going to trade it up and down. But I tend to be more of a long-term guy. We have to run the company for the long term, right? How is the stock going to look in 3 years, kind of thing? What's the company going to be worth? What can we accomplish with that? So I'm really excited with what got announced this week. I think it's the biggest announcement we'll have of the year. There'll be a lot of product announcements that'll follow on as we get into more of kind of what I'll call the holiday, the sprint towards the holidays kind of thing globally. But I think we at the company, I know I am, everybody's really energized by the things we announced. It's an exciting time to be here. I just keep hoping that the pace of innovation actually accelerates even more from here. And I think that's the intent.
All right, then thanks a lot again for taking the time, Brad, and then see you possibly on another call discussing what's new and possibly also around the numbers next time.
Anytime.
Cool. All right, thanks, Brad. See ya.
Thanks, Marcel.